how do you screen stocks for Sharia compliance? Or how do you check if a stock is halal? There are two aspects of the screening. One is the business screen, where you need to check if the company's core business, is permissible or not. So if, for example, a company's core business is into selling alcohol and so on, obviously it won't be permissible to invest into it. But then some companies will have mixed revenues. For example, Ford, its main business is manufacturing cars and automobiles, which is permissible. But it'll also have income revenues coming in from its credit segment, in which it earns money on interest. It provides loans to its customers so that the customers can buy their cars, and it earns interest revenue that way. So in such cases, you need to see if the impure income is less than 5% or not. If it is more than 5% of its total revenues, then such a company should also be screened out, and it won't be permissible to invest into it. The other aspect is the financial screening. So is the company's operating in a manner that does not go against the Sharia standards? Does it have interest-based debt that is beyond 30% of its market cap according to AAOIFI standards? So that would be one screen for the financial ratios. The other is, does it have non-compliant assets like short-term investments or into money market funds or those kind of things. So are these more than 30% of the company's market cap? Now, when you screen them for financial ratios, you'll also want to check into how much interest income the company is generating from its extra cash and so on. So if its interest income, along with any of its impure income from impure segments, is more than 5%, then it's again screened out. If the company's interest-based debt is more than 30% of its market cap according to AAOIFI, then it's screened out. For other standards, it's slightly different. For example, the S&P Shariah, they use a 36-month average of market cap to check, whereas FTSE and MSCI, they have standards based on the total assets of the company. So, but in total, they'll check mainly for the interest-based debt and for any non-compliant assets. It's slightly different when it comes to FTSE and MSCI, and it's slightly different when it comes to S&P and and Dow Jones. The S&P and Dow Jones, they only check for interest-based debt, whereas AAOIFI checks for debt as well as non-compliant assets. The S&P and Dow Jones have recently updated their Sharia screening. Earlier, they used to even check for cash and accounts receivables. They don't do that anymore based on an update in September, October 2023. So broadly speaking, if a company passes the business screen, if the company passes the financial screen, then the company will be permissible to invest in. So where are all these rules coming in from? The ratios, or the 5% rule or the 30% rule. I talk about all of that in another video. Is it really halal to invest in stocks? Where I explain the context and background to these Sharia standards. And this is what we do at Muslim Xchange. We screen global stocks for Sharia compliance, and we screen based on 5 major standards.